Hey guys, thanks for coming. My name is Toby Treese. I'm the audit partner over Pandora Media here. What's your name?
I'm Harrison Fuller.
Sabrina Flory.
Brandon Gillum.
Nice to meet you all. So I've been looking over Pandora as a company, and there's a couple things that I wanted to talk about. So they're a personal music platform that they do streaming through the internet. They have a user base of over 70 million, which is a ton, and they've been around. I think they went public in like 2005. So looking at how they operate, I saw there was a basic structure of three. They have an ad support system, which for free users, it's about 80% of their revenue. They have a subscription platform, and they have a more premium subscription platform, which gives you more ability to customize your playlists and things like that. Looking at how operations go, there's a unique operating risk I wanted to talk about. So in the ad-supported revenue service, the segment itself seems to be complex because we have to be able to identify users. So if you have a premium account, you're paying for it. We know this is a real person who's listening, they're invested in it. But for the free service, it seems like it could be difficult because anyone could have like 5 accounts and they could use them on and off. So I think that could skew the number of potential listeners, and it could affect both revenue and expenses of the company. So I think that's something that we should look into their IT systems and how they record and identify specific users. What are some other financial statement level risks you guys are thinking about?
Yeah, a couple big ones are, number one, the company's going through a major change. Pandora's about to merge with SiriusXM, and over the past year, a lot of the members of the board of directors have changed. They've kind of filtered in and out, and the CEO, Roger Lynch, actually just came out of Pandora, just came out and said that he is going to leave because of the merger, and so we're going to have to pay extra close attention to the tone at the top. Because of all the changes and the continual reported net loss that the company's had since the year 2015, there could just be a lot of risk and a lot of incentive to kind of change the financial statement numbers in order to improve stock price. In addition to that, because the company's public, there's obviously going to be a lot of litigation risk, high litigation risk, and in relation to that, it's very, very important to pay attention to the content rights that the system that Pandora has for that. And basically, what they do is they go out and they pay an artist for a certain amount of money to be able to have possession of their intellectual property. And so, because of that, it's going to be important to test a lot of the rights and obligations of a lot of what they say that they own pertaining to a particular artist, and so there could just be a lot of risk pertaining to financial statements in that regard. So
I agree. If there's any litigation issues where an artist might be suing, we definitely need to make sure it's being disclosed in the financial statements.
Yeah.
So how do we go about calculating materiality?
Yeah, so for materiality, like Harrison was saying, they've operated in that loss for the past so many years. So we found it was best to take revenues as our source of how we were going to calculate materiality. So we have our Q3 numbers that we were able to take, which we took revenues of just above $1.1 billion. We prorated those numbers, doing a calculation of 12 over 9 to get the year-end numbers, which came in just under 1.5 billion. So since this is a public company, we took a fairly conservative approach here. Multiplied that number by 0.05 and found our overall materiality of just over 7.4 million. So then when calculating our total misstatement, we multiplied that number by 50%, and we were able to find our total misstatement of just over $3.7 million. So we used this number to then calculate and populate a spreadsheet, had all the balance sheet and income statement numbers, we were able to find our in-scope accounts, and we ran some flex analysis and vertical analysis and found changes in those accounts throughout the course of that year. It's also important to note that you said at the very beginning there were 3 sources of revenue. Well, there was also a ticketing revenue service that Pandora was a part of, and that actually got discontinued. So that won't show up there, but that's also an important thing to note for in terms of how they've operated at net loss, and then that's something that they've even discontinued, so that's even less revenue coming in for them.
Okay. Okay, wonderful. While looking at, as Harrison mentioned, the merger with Sirius XM, and the company running at a net loss for the last handful of years, I think for thinking about potential for fraud, the executives have had a really high turnover rate due to the constantly operating in net loss. So there's a lot of incentive and pressure on them to turn a profit in this company right now. And not just that, their compensation is based on their performance and it's paid in stock. The stock has been going through a lot of volatility due to the net losses as well. So I think with the top executives changing so much, we really need to pay attention to if there's a lack of oversight and the controls that they might have in place and the failure to segregate their duties. They will also, due to their compensation, be attempting to most likely buff up revenues and of course lower expenses. So we need to be mindful of that. I'm worried about accounts that could be estimated, such as cost of revenue, that they could either put personal expenses in or attempt to say are lower than they really are for the financial statement purposes. The 10K pointed out that they haven't been compensated, none of the executives have been compensated in the last handful of years due to the poor performance. So that's just something that we really need to be focused on. I feel like going through the IT systems for the lack of oversight and making sure that nobody has too much access to change everything like a super authority system, I think that would be really important. But for the estimating accounts, have we already decided on assertions and accounts to test?
Yes, so after performing and looking at our preliminary assessment, we determined some significant account assertions that we should really dive into and do a lot of substantive procedures on those in order to keep our audit risk medium to low, as this is a large public company. Some that we chose to focus on more intensively were goodwill and the valuation of that, just with a lot of their acquisitions recently, and just goodwill as an account in general is easy to properly account for. We want to continue annually checking for impairment and making sure that whoever is valuing that is using lots of judgment and discretion, not trying to input those numbers and just keeping that accurate. And like you mentioned, the cost of revenue, we did want to check on that and just make sure that it is having full completeness, as that is an easy expense to knock down and buff up their revenues. But that one is one that regards to generating all of their revenue as a whole, and so that would be an account that they would be able to leave off some things that maybe should be included in that. In addition, the long-term debt is 42% of the company's liabilities, so we want to make sure that we are accurately presenting and disclosing that for shareholders in order to display where that long-term debt comes from and give the shareholders a better understanding of what that represents. Their product development expense account is one we wanted to look at both for completeness and for presentation and disclosure. That was another expense that would be easy to capitalize and put into a research and development account, where some lines should be included in their product development expense. And we wanted to present that accurately so that shareholders know what they are using in order to generate new discoveries and new ventures.
All right, wonderful. Is there any other information that we should discuss?
Yeah, I mean, a lot of the other relevant information that's important to the audit is that's been put out by the company to really just pertain to the merger that's kind of upcoming. Throughout the past year, every single 8K has kind of pertained to that. They released one that said that they were predicting a net income starting in the year 2019 for the company based on merging with Sirius XM.
Even more pressure.
Yeah,
Yeah,
exactly. So the management is very, very focused on turning a profit because they just have not done that the past few years. And so that's something that's really important to kind of keep in mind. And like I said, their CEO just left, so there's going to be a lot of change in how
seems that we have a pretty strong game plan together already, so thank you all for coming out.